Right. The today's concept, today's topics we are going to discuss. The first one is repudiation in insurance. Now, repudiation in insurance refers to an insurance company's refusal to honor a policy claim or contract, usually due to breach of contract or misrepresentation by the policyholder. Now, repudiation here we mean, in a simple terminology, we can say it's a cancellation, or we can say it is the insurance company refusing to pay the claim amount to the policyholder because of some of the reasons. It may be the breach of the contract, that is, the rules and regulations are not as per the followed as per the contract of insurance, or it may be misrepresentation by the policyholder. Maybe the policyholder has misrepresented the figures or misrepresented the scenario situation. Hence, the insurance company will go with the repudiation of insurance policy. This can include situations where the insurer denies a claim, rejects a policy, or refuses to pay the benefits. Now, this repudiation includes a situation where the insurer, that is the insurance company, denies to claim, that it will not give the claim amount to the policyholder, or rejects the policy. They may go with the rejection of the policy totally, or refuse to pay the benefits, or it will not agree to pay the benefits to the policyholders. Such a concept we call it as repudiation in insurance. Claim, which we also call it as claim repudiation. Now, claim repudiation, this occurs when an insurance company denies a claim after reviewing it and determining it doesn't meet the policy terms and conditions. Now, if a policyholder requesting for a claim procedure with the insurance company, then insurance company, what it will do is it will go with the verification of the insurance policy's terms and conditions. If the policyholder doesn't meet with the policy terms and conditions, then in that case, the insurance company will not give the claim amount to the policyholder. It will deny, it will not accept for giving the claim policy. And the reasons for the repudiation could include misrepresentation. Maybe the policyholder has misrepresented the information at the time of claim settlement, or non-disclosure of the material facts. The actual facts, original facts have been manipulated, has been not represented to the actual process, or if any fraud that has been taken place at the time of representation of the material to the insurance company. Maybe because of some of these reasons, the claim repudiation will be done. Policy repudiation. Claim repudiation means company is not giving the claim amount to the policy holder. Policy repudiation means the entire policy is not honored. This refers to the insurer refusing to honor the entire insurance policy. Now, entire policy is not being honored by the insurance company. That is called policy repudiation, often based on grounds like misrepresentation or fraud. If misrepresentation is done by the policyholder, say for example, the original age of the policyholder is 50, but in the policy document, he mentioned it as 40. This is one of the misrepresentation, right? So this kind of misrepresentation, or if any fraud that has been taken place, and after the verification, if insurance company find out so, then it will go with the policy repudiation. Reasons for repudiation. First reason is misrepresentation. The misleading information in the application form or during the claim process given by the policyholder leads to the repudiation of the insurance policy. Non-disclosure of the material fact. The policyholder, if he fails to give the exact details or the true material facts, then the insurance company can go with the repudiation of the insurance policy. Then fraud. The policyholder intentionally deceives the insurer for financial gain. In some of the movies we have seen that to get the claim in insurance claim amount, people will make a fake representation as the insurance policy holder has expired, but the person is still alive, but it will telecast, it will showcast as if they have expired to get the insurance policy amount. So that comes under a fraud. If any fraud done by the insurance policy holder just to manipulate the insurance policy company, And if insurance company find out so, then they will go with this repudiation of the insurance policy. I hope the concept is clear to you all. This is repudiation or refusal of honoring the insurance policy or insurance contract or insurance claim amount. Next topic we have is stages of insurance policy life cycle. Now we have stages of insurance policy. When we are taking the insurance policy, every policy holder has to undergo with some sort of, sort of steps. The steps include, first one is pre-purchase. Pre-purchase, this stage involves marketing, consumer inquiry, and initial engagement between insurer and potential policy holders. It includes providing quotes, assessing risk, and advising on different insurance products. Now, before taking the insurance policy, every policy holder, what they will do is they will do the pre-purchase. That is, before purchasing the insurance policy, they will verify what are the available policy, what are the requirements of policy holder, which policy is meeting the requirements of the policy holder. So he will verify each and every concept of the policy holder, the tax benefits that the policy is going to provide to the insurance policy holders, what is the risk that he has to face if he is taking different types of policies. So you have to do the pre-purchase investigation or pre-purchase estimation he has to do. Now, after doing the pre-purchase thing, then second one is underwriting. Second step is underwriting. Once a potential policy holder applies for insurance, once the policy holder decided that which policy he is going to take, now after that, he'll go with the underwriting. The underwriting process begins. After selection of the policy, underwriting process will begins. This involves evaluating the risk associated with the insuring the individual or entity or setting the terms and premiums for the insurance policy. Now, after selecting the insurance policy, then in the underwriting process, what is the risk that is associated with the policy that will be evaluated, whether it is individual policy or a group entity policy. Then what are the terms and conditions that are included in the policy? Then what is the premium that has to be paid by the policy holder? All will be estimated in the second process, that is underwriting process. Now, after underwriting process, then comes the issuance. After underwriting, if the application is approved, after underwriting process, the application will be approved. The policy is issued to the insured. That is, the policy will be given to the policy holder. This stage involves generating the policy documents that outlines the terms, conditions, coverage, exclusions, and premium information. Now, in this third stage, issuance, policy document will be included, preparation of the policy document, what are the terms and conditions that are there in the policy, how much the coverage will be provided by a particular policy, what are the exclusions we have in the policy, and what is the premium information we have. Everything will be included in that issuance of policy. Then the fourth point is active policy management. Active policy management. During the policy term, insurer manages the policy by processing endorsements, that is changes to the policy, collecting premium, and maintaining the communication with the insured. Now, because the insurance policy is meant for, if it is a general insurance, it is for 1 year, and if it is a life insurance, it goes beyond 1 year maximum, till the life of a person. Hence, there must be a management of policy between insurance policies must be managed between the insurance company and the policy holder, collecting the premium from the policy holder, and maintaining a communication with the policy holder. All these things comes under this fourth step, that is active policy management. Then claims management. If the insured experiences a loss that is covered by the policy, they will file a claim. Now, in this fifth step, claims management. If the insured experiences a loss that is covered by the policy, they will file a claim. Now, if any case, if the insurance policy holder faces some sort of loss, then he has to file for a claim of the policy document. This stage involves assessment and settlement of claims in accordance with the terms of the policy. If the policy holder is facing any loss or he got admitted into the hospital for treatment of some disease, or he met with an accident or any other concept, any other situation where the insured party is facing losses, then he has to go for the claiming process. Now, this particular claim management involves assessment, has to verify what is the loss that the insurance policy holder is facing, how much loss that is claimed by the insurance policy holder. This will be assessed and settlement will be done according to the terms and conditions which are prescribed in the policy. Then, next process is renewal. The next process is renewal. As the policy term comes to an end, insurer evaluate the policy for renewal. This can involve reassessing the risk, adjusting the premium, and updating the terms and conditions. Now, renewal, if at all the policy term comes to an end, like in general insurance policy, it is for 1 year. Suppose the 1 year period is completed, then they have to go with renewal of this particular insurance policy. Or if it is a term life insurance policy, if the policy is completed, then they have to go with the renewal of the policy. This involves renewal and reassessing the risk, adjustment of the premiums, and updating the terms and conditions in the policy. This includes in the renewal process. And the last stage of insurance policy is cancellation or termination. That is usually a closure of your insurance policy. A policy can be cancelled before its expiration date by either the insurer or the insured, depending upon the terms of the policy and the prevailing regulations. Now, in case of cancellation or termination, the policy will be cancelled before either the expiration, or before the expiration it will get cancelled, depending upon the terms and conditions, depending upon the requirements of the policy holder or the insurance company, the policy will get cancelled or terminated. These are the various stages that are included in the insurance policy life cycle, whether it is a life insurance or a general insurance. The stages are common, but the conditions or the treatment is little bit different. These are the stages of life insurance policies. Then another small concept we have in insurance is a free lock period in insurance. Free lock period. A free lock period in insurance allows you to review a free lock period allows you to review the terms and conditions after purchase and cancel it without penalties if you are not satisfied. Now, free lock period means suppose a policy holder has purchased the insurance policy, but after some period, he want to cancel that policy. Mm, Now, without paying any penalties, without bearing any fines, if he could cancel, that is called as pre-lock period. That is a limit, a term of days, a number of days will be given for every policy holder to review and to verify. Then he can go with he deciding whether he want to continue with the policy or whether he want to drop the policy. That period we call it as lock-in period, pre-lock period. Now, usually this period lasts for 15 to 30 days from the date you receive the policy document, depending upon the policy type, whether it's electronic or purchased through the distance mode. Whether it is any mode of insurance policy, some 15 to 30 days time will be given depending upon the insurance policy or policy insurance company. 15 to 30 days period will be given for the policy holder to decide whether to continue with the policy or to drop the policy. That period we call it as pre-lock period. Now, why the pre-lock period is given? The pre-lock period protects the policyholder from making hasty or uninformed decisions, as insurance policies can be complex with various terms and conditions. This pre-lock period is given for the policyholder for him to make the uh, defined decisions. He cannot make any hasty or immediate decisions which leads to the misrepresentations in the policies later. Hence, to avoid such misrepresentations or hence to avoid such ununiformity in the policyholder's decision, this period will be given so that he will decide and stick to the decision which he has taken in the policy. Now, this duration, as per the IRDAI, that is Insurance Regulator Development Authority of India, generally allows 15 days pre-lock period, which extended to 30 days for electronic policies and those purchased through distance mode. As I mentioned, 15 to 30 days period, 15 is the minimum period and it will be extended to 30 days if the policy is taken online, that is electronic policy. How it works: if the policyholder is not happy with the policy after reviewing it, he can cancel it within the free lock period where he need not have to pay any fine or any penalty. Cancellation process: to cancel, policyholder usually need to submit a written request to the insurance company detailing your reasons for cancellation. Now, why it is important? Pre-lock period helps the policyholder in taking a proper decisions with regarding to the insurance policy which he is going to take as per the needs and requirements of the policy holder. So this is about pre-lock period. Then we have another concept called grievance redressal mechanism. Grievance redressal mechanism. Insurance is a contract of indemnity, that is protection intended to compensate the insured for the loss. Disputes over such contracts are common and due to dominant position of the insurance companies, those different often to unheard. Now, because it is a contract between two parties, insurance policy holder and insurance company, when we can see that there is a contract of indemnity, the conflicts will usually arise. The disputes will usually arise. To protect the rights of the insured consumers, that is insurance policy holders, effective redressal mechanism were introduced by the government of India. Now, basically, this grievance redressal means it's a complaint problems. Readdressal means these complaints will be addressed through a mechanism. Any complaint which is raised by the policyholder, any problem which is raised by the policyholder will be solved, will be given answers through this mechanism. This mechanism we call it as grievance readdressal mechanism, which is introduced by the government of India. These mechanisms apply not only to traditional insurance but also to insurtech. Insurtech means insurance with technology. The rise of digital technology brought fintech into insurance, giving rise to the sector known as insurtech. Despite the digital process, there are no distinction in the redressal mechanism between normal insurance and insurtech. Whether it is a normal, regular mode of taking up the insurance or electronic medium of taking up the insurance, that is insurtech, the grievance redressal mechanism is going to be common between these two types of insurance policies. Now, grievance mechanism, if you see, we have several ways of solving the conflicts or several way of giving solutions to the problems which is raised by the policy holders. That includes, first one is policy issuing office, then grievance redressal officer, then integrated grievance management system, IGMS, insurance ombudsman, last one is your consumer commission. The first one, if you see, policy issuing officer. If the insured individual has any complaint regarding policy servicing, they can address them by submitting a written grievance to either the policy issuing office or regional office for resolution. Now, in this particular grievance redressal mechanism, if any policy holder got any problem or any conflict or any complaint, they can write a letter, a written letter, and that should be submitted to the policy issuing office from where we have taken the policy, or to the regional office. If the policy issuing office is not accessible to the policy holder, they can write to the regional office for the solution. This is the first stage of grievance redressal mechanism in insurance and works like a negotiation process. Now, this is the first stage which the policyholder has to follow when he faces any sort of problem or when he want to raise any complaint. Then second one is grievance redressal officer. Now, grievance redressal officer. Now, grievance redressal officer, if you as an insured person, that is the insurance policy holder, are not satisfied with the resolution of your complaint raised through the aforementioned methods, like the previous mentioned method, like in the first stage, we have raised a issue to the policy issuing officer, and if the policy holder is not satisfied with the solution that it is given by the policy officer, then they can raise a complaint through the. You can reach to the grievance redressal office using the contact details provided on the official website of your respective insurer. And if the policyholder is not satisfied with the solution, he can go to the grievance redressal officer. It will be the official website, in the official website of the insurance company, from where the insurance policy holder has taken the insurance. From there, you can get the address of this grievance redressal office. Then again, in the grievance redressal office, a complaint has to be submitted in writing, accompanied by the necessary supporting documents. Again, here also a complaint must be given, a written complaint must be given along with the supporting documents to request for the to request for the solution for the problem which the insurance policy holder is facing. Now, after that, integrated grievance management system, that is IGMS. If the insured remains unresolved after 2 weeks of the grievance redressal office response is not satisfactory. Now, even after reaching the grievance redressal officer, if the insurance policyholder is not satisfied with the solution, then he can file a complaint with the integrated grievance management system. Now, integrated grievance management system through any of these ways. First one is register the complaint directly in IRDAI's online Bima Baro system. That is the first way you can contact the integrated grievance redressal system. Then send a complaint through the email to the complaints@irdai.gov.in, or you can raise a complaint through a call. This is the call number that is available. Then communication in physical form with the general manager of PPGRD. So these are the various ways that are available. After registering a complaint in Bima Bharosa system, the complaint details are forwarded to the relevant insurance company. The policyholder is sent a confirmation email containing an IRDA token number, which enables them to track the process of their complaint within the Bima Bharosa system. Now, once if you have raised a complaint in the Bima Bharosa system, after they reach the complaint, they will send a confirmation mail to the concerned policyholder saying that a token number will be issued. For next time, whenever he is reaching to the IRDA's office or grievance redressal mechanism system, then he has to provide that token number so that whether the solution is attained or not can be confirmed. A separate complaint registration form is required for each complaint. No two complaint is encouraged under a single format, and IRDA cannot register the complaint without the necessary information requested in the complaint registration form. Now, when we are going through with the integrated grievance management system, one has to go through with the registration process. That the registration complaint form must be filled by the policy holder. Now, if he got two complaints, he cannot go with one application. He has to go with the two different application forms, each for different complaint. And all the details must be duly filled by the policyholder, what that is asked in the complaint form. Then only it will be accepted by the grievance redressal system. Now, this is third one. Then the fourth one we have is insurance ombudsman. Now, insurance ombudsman is also a grievance redressal mechanism system. The grievance remains unresolved even after going to GRO, that is grievance redressal office. The policyholder can seek that redress from the insurance ombudsman authorized under Insurance Ombudsman Rule 2017. According to the government instituted this insurance ombudsman as per the rules 2017. If the policyholder is not satisfied with the solution which is given by the grievance redressal office, and even if he is not satisfied with it, then they can go with the insurance ombudsman. There are total 17 ombudsman centers located across the country in the following cities: Ahmedabad, Bangalore, Bhopal, Bhubaneswar, Chandigarh, Chennai, Delhi, Guwahati, Hyderabad, Jaipur, Kochi, Kolkata, Lucknow, Mumbai, Noida, Pune, and Patna. These are the ombudsman centers which are available in the major cities of India. The Council of Insurance Ombudsman (CIO) oversees the Office of Insurance Ombudsman, which were established under the Insurance Ombudsman rules. This office performs as an alternative platform for addressing the grievances of policyholders concerning policy insurance policies, group insurance policies, policies issued to sole proprietorship and micro enterprises. Their objective is to resolve complaints impartially and cost effectively. These ombudsman offices will work for every type of insurance policy, whether it is an individual policy, personal policy, or a group insurance policy, or policies related to business organizations. Any organization or any individual related insurance policy problems will be dealt in the insurance ombudsman office. The policyholder could file a physical or via post email facility is also available to the ombudsman having jurisdiction over your respective claim. Suppose if I am taking an insurance policy and I have a complaint, if I have to go to the ombudsman, I have to go to the area where I am residing. That is in Hyderabad ombudsman, I have to reach. Now, when I am reaching an ombudsman, we have to file a complaint. Either it should be a written format through a physical on paper, or it can be sent to the post, or we can email to the ombudsman also. These ombudsmen are empowered to receive and evaluate the complaints alleging inadequate performance by the insurers, including their agents and intermediaries. Now, mostly, if an insurance policy holder has got any problem with the insurance company or with the agents of insurance companies or with the intermediaries, we can easily go to the ombudsman. Basically, these ombudsmen are established in order to evaluate the complaints regarding the insurance policy companies, intermediaries, and agents. Now, these are the various complaints that we can raise with the insurance ombudsmen, which includes delay in settlement of claims. Delay in settlement of claims. If the claim settlement process is getting delayed, then we can go to raise a complaint regarding this in the ombudsman. Any partial or total repudiation of the claim by the life insurer or general insurer or health insurer. Any policy claims has been cancelled, has been not honored by the insurance company, whether it is a life insurance company, general insurance company, or a health insurance company. If the repudiation takes place either partially or totally, then we can go to the insurance ombudsman for the solution. Premium disputes were paid or payable in terms of the insurance policy. Any disputes, any complaints with regarding to premium, whether it is paid or whether it is going to be payable in the future, and if policyholders has got any problem with these premium payments, then they can reach out to the insurance ombudsman. Misrepresentation of policy terms and conditions. at any time in the policy document or policy contract. If there is a misrepresentation of the policy terms and conditions done by the insurance policy at any time of the policy of the at any time of the policy contract term period, if misrepresentation is done, then they can reach to the ombudsman. The legal construction of insurance policy in so far as the dispute relates to the claim. Regarding to the claim settlement process, anything which is legally included in the insurance policy, then still they can go to the ombudsman. Policy servicing related grievances against insurer or their agents and intermediaries. Any problem which is faced from the insurance company or by the agents or through the any other intermediaries like brokers, if the policyholder is facing any sort of problem, then they can raise a complaint regarding the policy companies, insurance policy companies, policy agents or policy brokers or any other intermediary. Issuance of life insurance policy, general insurance policy, including health insurance policy, which is not in conformity with the proposal form submitted by the proposer. Now, if any point or any terms and conditions which is specified by the insurance policy companies, whether it is a life insurance or general insurance or health insurance, if the terms and conditions or the proposals which are submitted by the company to the policyholder is not as per the rules and regulations, then they can they can raise a complaint on this with the ombudsman. Non-issuance of insurance policy after receipt of premium in life insurance and general insurance, including health insurance. Non-issuance of insurance policy. Now, after the premium is paid in life insurance or general insurance or health insurance, and if the insurance policy is not received by the policyholder, then they can raise a complaint with the ombudsman. Any other matter, along with all these complaints, if any other matter which is related to non-observance or non-adherence to the provisions of any regulations made by the IRDA, if the insurance policy companies are not adhering the rules and regulations issued by the IRDA with related to the protection of the policyholder's interest, or regulations or instructions or guidelines which are issued by the IRDA, then they can go to the insurance ombudsman to raise a complaint regarding all these issues. These are some of the complaints which are dealt with the insurance ombudsman. And if the policyholder is having any sort of problems or any sort of uh, complaints, they can the policyholder can reach the insurance ombudsman. So these are the grievance redressal mechanism which we can see in the insurance sector in India. So through the ombudsman or through the grievance redressal mechanisms or through the policy officer, the complaints will be solved by these parties with regarding to insurance sector. Now, when it comes to insurance ombudsman, there are few conditions. The complaint can be made to the insurance ombudsman within 1 year in either of the following situations. Now, the condition is first one, within 1 year, the complaint must be raised with the insurance ombudsman. When an insurance company, insurance broker rejects the complaint, if the insurance company rejects or broker rejects the complaint, then they can reach out to the insurance ombudsman within the 1 year period. Then when 1 month has passed since filing the complaint and the insurer has not responded, and if after raising the complaint also, if the insurance company is not responding within 1 month period, then they can go to the insurance ombudsman. The requested compensation amount in the insurance ombudsman complaint should not exceed more than 30 lakhs. It should not exceed more than 30 lakhs. Then the last one we have is consumer protection in the grievance redressal mechanism. Now, consumer protection, the amendment to the Consumer Protection Act 2019 expanded the definition of consumer to encompass individuals who purchase goods or services in exchange for money, excluding commodities or services sold for profit. Now, consumer protection basically it is amended in order to protect the consumers from purchasing any goods and services in exchange, where if the consumer is facing any sort of problem with regarding to the product that he has purchased, then they can reach out to these consumer protection councils. This broadly classification new extends to a wider range of consumers, including those within the insurance industry. When we talk about consumers, even in insurance industry, the policyholders are termed as consumers because they are ultimately purchasing the insurance product. As a result, policyholders are also empowered to seek redressal before the three-tiered judicial, quasi-judicial mechanism. In consumer protection, we will have three-tier quasi-judicial protection system. Three-tier we say because it will have three councils, three redressal mechanism: district level, state level, and national level. If a person is having any complaint at district level, if he is not getting solution, they can go to the state level. Even if state level, if they are not getting any solution, they can go to the national level. So hence it is called as a three-tier quasi-judicial mechanism. As the pecuniary jurisdiction provided, 50 lakhs for the district commission. That is, if any complaint which is having a amount of 50 lakhs has to reach to the district commission. If it is more than 50, up to 2 crores, reach the state commission. And if it is any amount which is more than 2 crores, they have to reach the national commission. So even as the policyholder is also termed as treated as a consumer because he is purchasing the insurance product. Hence, even Consumer Protection Council also, the consumer can reach, the policyholder can reach, raise a complaint, get it solved with the Consumer Protection Councils through. So this is the grievance redressal mechanism within India we can see in the form of 5 categorizations. First one is policy issuing officer, grievance redressal officer, integrated grievance management system. In integrated grievance management system, we have a complaint directly raised in IRDAI, either through mail or through a call or through a physical representation with the general manager. Then insurance ombudsman. Then the last one is Consumer Protection Commission. This is the insurance grievance redressal mechanism system in India, which we can see. I hope the concept is clear to you all. The next concept we have is insurance arbitration. Insurance arbitration is a form of alternative dispute resolution, ADR, used to settle dispute between an insurer and the insured party. Like ombudsman or any other grievance redressal mechanism, insurance arbitration is also an alternative, another method of resolving the disputes that arises between the insurance company and the insurance policy holder. It involves a neutral, that is a third party, an arbitrator who hears the dispute and makes a binding decision. Arbitrator is a person who is not related to the insured policy, that is policy holder or the insurance company. A third party will get involved into the dispute and he will try to give a binding decision which is acceptable by both the parties, the policy holder and the insurance company. Arbitration is preferred over traditional court litigations because it can be faster and less expensive. Arbitration is a traditional method which most of the people will use when they want to get a solution. They'll involve a third party so that they will give the decision, which is a faster method of solving a dispute, and it is very less expensive compared to the all other grievance redressal mechanisms. Now, when we see the key aspects in insurance arbitration clause. Many insurance contracts includes an arbitration clause specifying that dispute regarding the policy will be resolved through the arbitration rather than the court. Now, If the policy holder intends to go with the arbitration process, that must be included in the policy document. That in the policy document, one of the point it must be specified that without going to the court, if any complaint, if any dispute arises, they will go through with the arbitration process. So this particular clause must be mentioned in the policy document. Then only they can go with the arbitration process. Now, scope of arbitration. Typically, arbitration in insurance disputes focuses on the quantum of the claim, the meaning, the amount of the money owed rather than the admissibility or existence of the claim itself. Now, when it comes to arbitration, its scope is fixed to, it focuses on any dispute which is related to the amount of money that is owed by the insurance company to the policy holder. It will not deal with the existence of the claim or admissibility of the claim, but it will deal with the quantum of the claim, that is amount of money that is owed by the insurance company to the policy holder. Now, selection of arbitrator. The most important point in the arbitration process is the third party. Who will be the third party? That is, who is going to act as an arbitrator, a mediator between the policyholder and the insurance company for the settlement of the conflict. Parties may agree on the arbitrator or choose one from the designated list. Both the parties, insurance company and the policyholder, both together can select one person as an arbitrator. Hearing and award. The arbitrator holds a hearing, hears evidence from both the parties, and issues a written award which is usually legally binding. Now, as an arbitrator, when he is solving the complaint, when he is solving a problem, when he is giving the solution, he has to hear from both the parties, from the policyholder and from the insurance company, take his both opinions. Then a written award, a written solution must be given by the arbitrator, which after accepting it by both the parties, policyholder and the insurance company. This is how the arbitration process we can see in the insurance sector in India. This is insurance arbitration. Then why we go with the arbitration process? It is very speed effective and cost effective. Very faster way we can solve the complaint. In a faster way, with the help of arbitration process, the complaints will be solved in a faster way, and it is less expensive compared to the other traditional litigation processes. And confidentiality. In arbitration, confidentiality will be maintained because hardly three people will be present at the time of hearing and solutions. That is arbitrator, policyholder, insurance company. Unlike the court, in the court, more number of people will be present. So the confidentiality may not be maintained. Hence, confidentiality is another reason because of which the policyholder and the insurance company will go with the arbitration process. Specialized expertise. Arbitrators often have expertise in insurance for a specific industry, allowing for more informed decision making. Because arbitrator, when he is dealing with the complaints regarding to the insurance sector, arbitrator should have a maximum knowledge and expertise knowledge in the field of insurance industry. Then he will, whatever the decisions he will provide, that is up to the mark, which is acceptable and satisfiable by both the parties. So hence, it is the arbitrator will possess a specialized expertise. Binding decision. The arbitrator award is usually binding on both the parties. That is, whatever the decision that is made by the arbitrator, which is usually accepted by both policyholder as well as insurance company. This is the reason why which the policyholder and the insurance company go with the arbitration process when compared to the other traditional litigation methods. And then one more topic we can see is insurance e-policy. E-policy here we mean electronic insurance policy is a digital version of your insurance policy typically available in PDF format. Instead of having it in a soft copy, hard copy, we are going to have it in a PDF format, that is the electronic format. It is stored online, allowing you to access it anytime, anywhere, rather than needing a physical copy. Insurance policies often have several advantages, including convenience, security, and environmental friendly. The key features and the benefits of insurance policy is first one, digital access. Now, insurance policies are accessible online through your insurance provider website or insurance account. At any point of time, you can have access to the insurance policy. Convenience is another feature or benefit of e-policies. You can access your policy document on your phone, tablet, computer, eliminating the need to carry a physical paper. Security. E-policies are protected from a loss or theft, and you can set a password or through the security measures to protect your digital documentation. So security is another benefit which we can see with the e-policy. Environmental friendly, because we are reducing the paper consumption, it leads to the sustainable environment friendly nature. Hence, e-policy also have a benefit of environmental friendly. An e-insurance account can store multiple policies, making it easier to manage your insurance needs in one place. So we can easily maintain different insurance policies in one place with the e-insurance policy. Simplified claim process. E-policies can streamline the claim process by providing easy access to the policy information and documentation. Accessing and managing insurance policy. Look for the e-policy. Most insurance policy providers offer e-policies as a digital download or through an online portal. Log into your account, download your view or e-policy. How to access the insurance policy is look for the policy, then log into your account, and you can usually view your policy or you can download the policy. And the last concept in today's class we have is online insurance marketing. Insurance companies are increasingly using online marketing to reach potential consumers and drive sales. This involves utilizing digital channels like email marketing, social media, search engine optimization, and paper check advertising to promote their products and services. Now, because of the development of the technology, now even insurance product can be sold online. The marketing has a flexibility to reach to the maximum number of people in that particular country. The key aspects of online marketing insurance is digital channels. We have a number of digital channels available right now through which we can market our insurance products, like email marketing, social media, online advertising. We have many other channels. Then SEO, search engine optimization, helps insurance company improve their website viability on search engines, making it easier for potential customers to find them. Whenever we are insurance policies. Content marketing, creating valuable and informative content that addresses consumer needs and concerns. Now, creating the information which is connected through social media marketing. Now, social media marketing using the social platforms also, the insurance products can be marketed. Email marketing by sending the emails to the targeted email users by providing the valuable information to the consumers through which we can go with the insurance marketing. Then online advertising like in the Google Ads or any other advertising platforms, we can go with the online advertising. Then benefits of online insurance marketing, increased reach. Maximum number of people we can reach through this online insurance marketing. Cost effective. Insurance marketing is very cost effective, which requires less cost, having the maximum benefits. Improved targeting. Through the online market, we can target the market based on a specific characteristic on demographic basis or on the interest basis or on any other characteristics. We can reach the targeted consumers. Real-time feedback. Digital marketing allows insurance companies to track their consumers' performance and make adjustment in the real time. Enhanced consumer engagement. Online marketing provides opportunities to engage with consumers, build relationship, and foster brand loyalty. With the help of online marketing, online insurance marketing, consumer management can be easily maintained. Enhanced engagement of consumers will be maintained by the insurance company. So these are the benefits of online insurance marketing. I hope that today's concept is very much clear to you all. We'll meet again in the next class to discuss further more concepts. Have a nice day. We'll meet again in the next class. Thank you.